Hi, everybody. This is Gary Dean, and this is our nightly video report for Thursday, October 6, 2016. I'm getting this out about 30 minutes before the bell sounds because it could be a tradable video, and I'm going to leave this up to you. But I want to point out what I see going on, and we have the non-farm payrolls going on tomorrow, and really what this looks like. We've just been playing ping pong in between this what was a triangle here that we broke through and then bounced back in again. So I'm going to say, all right, you know what? Let's just not even call it that big triangle, and we're just going to go here and say it's a descending triangle. So if this is the case, then we're looking at a move that is going to be from 2179. Let's just say 30 points. So it would be a break of 30 points here would be added in. So that's going to be looking to take the S&P all the way down, let's say 20, 44, 30, right pretty close to these lows here. Now, what may take place tomorrow, and this is why I wanted to kind of get it out, is let's say they tried to ram the markets up on whatever non-farm payroll numbers come out. There's a good shot that it's going to get held down somewhere in here, and we're going to get one of these moves, gap up and then drop down. So I'm good. The way that I'm going to really work this is take a short position in this area here, say half a position. If it goes up tomorrow, I'm going to short anywhere from, I'm going to take a second half position, anywhere from the 2177 up to the 2174, and then just place a stop up at the 2187. So I know where the stop is going to be not that much higher than where I'm going to be averaged on shorts. So if I get stopped out, it's not going to be the end of the world. It's not going to be, I'd rather be in a trade that is going to work than not work, but it's a market and you have to prepare for either way. But like I said, everything that I'm looking at right now is telling me that the next move is going to be a break to the downside, whether they go up here first or they just gap down tomorrow. Now, why is this important? If we come down here, let's go to a daily chart. And remember, we're in this huge rising wedge right now. And if we come back down to these lows right here, which is what the target is calling for with that pattern, then we're breaking this wedge right here, and that's calling for a move that could come anywhere down to these levels. And this is what I've been saying for quite some time, that I believe these are going to be the targets. Let's just say 2048 is the target. We're still talking over 100 points from where we are right now. So I think the risk reward is on the side of a short position, just because you know where to put your stop as far as if it goes up. But if you buy here anticipating that the algorithms are going to be programmed to the upside, and then they open down, your potential loss is over 100 points. So that's why I'm saying I believe the risk reward is on the side of the bears here, because they got a lot more points to the downside than the bulls have to the upside. So that's how I'm going to be handling this. Like I said, I mean, if you're not short, I'd be building a half a position right around now, and then if it opens down tomorrow, maybe wait for that little reflex bounce and then add another half. Or if they open up, then you add the other half from there, and that would be somewhere up into this 2177 level, and then we're just going to put our stop above the 2188. So that's how I'm going to be working this. Everything is neutral here. So here's our SMI. It's neutral, but we're coming off of bearish divergences. We go to a 60-minute chart. It's neutral. We go to a 15-minute chart. It's coming off of overbought levels, and we don't really have any bearish divergences. But in any case, you have the two, say, swing trading charts that are neutral, so it can break either way. And like I said, I'm expecting it to be to the downside and still have plenty of gas to go before we get into the oversold levels. So I just wanted to get this out. I think it's it's definitely something you can do. I would take a half position and just say, okay, I'm hoping that I'm going to be able to fill it someplace up here. the other half at a short position. If not, I'm going to run with half, and then when we try to back test this level here, fill the other half, and then go from there. So let's see what plays out tomorrow. You know what? I'm just trying to put out a trading plan right now. This is the stock market. The stock market's going to do what it wants to do. But the way that I'm really looking at this is our wave A, this is our wave B, and now we're going to start a wave C down that should come someplace down into this 2048 level. So with that, let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.